What up? It's Moneyball Investing. I want to go over SoFi stock has seen a pretty dramatic move in the last week or two. I have in full disclosure, long-term position. I have about 600 shares at about a $17 cost basis. I've been holding since pre-merger. Went public through IPOE, which is a Chamath Palihapitiya SPAC earlier this year. Let's get into why, what SoFi does, why the stock has been moving and why I'm so excited about it. So let's back up a second, kind of like what I was saying in my Coinbase video. Large incumbent banks and financial institutions, there's a lot of problems with them, right? They've been the targets of some of the largest cyber attacks in recent memory. It can take several days for transactions to post to your online account, which can be really annoying when you're trying to transfer money to other people, or you're trying to, sort of reconcile your own statements if you're doing your own books. It's just unacceptable that it could actually take several days for deposits to actually show up, or for transactions to show up as cash going out the door. Customer service at most banks, honestly, I think it's pretty terrible. This is the biggest thing here. They just kind of lack the variety of services or move at the speed that, today's tech-oriented consumers demand. And so because of all this, they're busy gifting their customers with free checkbooks, instead of giving them, all the services that they need all in one place in sort of an intuitive and mobile first way. That's really important, guys, mobile first. And this dynamic has led to a lot of fragmentation in the financial services industry, and new players have began to emerge. And one of these is SoFi. So let's kind of get into SoFi. Let's get into their products. They operate through three segments: lending, technology platform, which is called Galileo, and I'm really going to hit this home because no one seems to be talking about it at all, and their financial services. So lending, pretty straightforward. Company offers multiple loan products such as student loans, personal loans, home loans. You can even consolidate your credit card debt onto the SoFi platform. Financial services, they have a bunch of different things. They've got SoFi Money, SoFi Invest, which allows members to access trading and advisory solutions, robo advisory, as well as you can actually trade cryptocurrencies on SoFi. And then they also have the SoFi credit card. And basically right here is sort of their business model, right? They kind of have this thing called the financial services productivity loop. That's what they're calling it. And really, guys, this is just a fancy way of saying flywheel. And as I've mentioned in some of my other videos, a flywheel, kind of sales model is centered around cross-selling your product suite to existing members. So, for example, let's say someone goes on to SoFi and they may apply for a student loan. And so that's product number one. Well, based on their experience, that same person may later consider using a second product like SoFi Invest. Hey, I've got a loan through SoFi. I like their customer service. The platform is really easy to use. It's a mobile first, experience for me, which is what I want. Now I want to start investing. So maybe I'll start, buying some stocks. Maybe I'll start buying some crypto. But all of a sudden now I start using the SoFi Invest product. It's product number two. And so this is crucial because as members use more SoFi products and they become more ingrained into its ecosystem, SoFi generates more revenue per member, or ARPU, average revenue per user, without incurring additional acquisition costs. And this results in extremely efficient unit economics for SoFi and a higher lifetime value per member. This is pretty unbelievable. In addition to realizing the benefits of more members and adopting multiple SoFi products, the company's strategy delivers operating and technology efficiencies, right? And so what does this mean? Look at this timeline here. You can see that by the efficient unit economics and the margins and the high margins and cash flow that SoFi has been able to generate allows them to reinvest back into the business and launch all these new products. Just look at 2019, they did all of this stuff. It's a really nice graphic. So let's get into the B2B side of the business. Galileo, that's their, up here, this was more B2C, business to consumer, lending and financial services. Now let's get into B2B and, kind of commercial opportunities. In April 2020, SoFi acquired a company called Galileo for $1.2 billion. And Galileo basically operates in sort of the banking as a service space. It's a digital payments platform that enables checking and savings like account functionality through its open APIs. And so Galileo's APIs power functionalities including account setup, funding, direct deposit, ACH transfer, IVRs, early paycheck deposit, bill pay, all of these things, all sorts of things. And so the thesis for this acquisition was to take the Sofi product and wrap Galileo's enterprise APIs around it, making it available to Galileo's commercial clients and Sofi's consumer base. So in a way, sort of this Sofi-Galileo combination is analogous to sort of an Amazon AWS type model. Like on the one side of the equation, there's a consumer business, but on the other side, there's this technology infrastructure play. This graphic below is a really nice slide I found that kind of has the strategic benefits and the rationale for the acquisition. You can take a look at that. I have it in I wrote this on my free Substack. So if you want to subscribe, I do deep dives. I try to post 2 or 3 a week, and then I follow them up with YouTube videos just in case these are a little long. But again, totally free to subscribe to the Substack, and obviously YouTube channel free as well. So feel free to subscribe, hit the notification button. So let's go over the financial results. Sofi has delivered 8 consecutive quarters, basically 2 years of membership growth. And as of their latest filings, which was the end of Q2 2021, the company reported 2.6 million members, which was up over 100% year over year. And the company boasts 3.7 million products, up from 1.7 million just 1 year prior, right? So this is an interesting dynamic because we can kind of see in these charts that Sofi is seeing meaningful growth in both the lending side of the business, as well as its financial services. But what really stands out is that the company's financial services products have quadrupled from about 600,000 to 2.7 million since the start of the pandemic. That's amazing. It's actually frightening how quick they're growing. So growth across the product suite has led to top line, what I'm calling hyper growth throughout the company, right? This is growing, over 50% year over year. But I really need to hit this home. Sofi is still operating at a loss. Okay. So as I noted above, the company is using its cash flow and efficient unit economics to invest back into the business. And this is going back into the business in terms of product development, as well as sales and marketing. Per the company's latest 10Q, so Q2 2021, they're investing aggressively in tech development and sales and marketing. And I'll get into that below. But as you can see, this is kind of their P&L. And their adjusted EBITDA obviously still operating at a loss. And you can see that lending makes up the overwhelming majority of their revenue. But you can see that equity research analysts from Morgan Stanley, Jefferies, and Mizuho just in the last month have all stamped Sofi with buy ratings. And what's kind of amazing is that all of these analysts note Sofi's flywheel business model, again, being able to cross-sell and upsell to your existing customers, thereby acquiring them for, keeping acquisition costs low and lifetime value high, and you expand your margins over time. But and also they're referencing the kind of simple UI UX user experience, which is not provided by traditional banking incumbents. But nobody's really talking about this Galileo integration, right? I mean, the word Galileo isn't even mentioned in some of these research reports. And so, this is kind of amazing because the products, offer members speed, selection, content, and convenience that only an integrated digital platform can provide. But they're not really saying how powerful this Galileo, opportunity is. And I'll get to that in a second here. But what I really want to hit home is that basically in the decade that Sofi has existed, they've evolved from, kind of a loan business, which was sort of their original business when it was founded, to sort of this tech-enabled financial services company. And they're in the midst of creating a super apps. And I love super apps. As members take advantage of the technology platform and the services offered, Sofi's revenue mix and margin profile will begin to shift. And so at scale, the unit economics of the member base should improve the profitability prospects of the business, and consumers remain sticky. And so that's what I mean here. Even though lending is a huge part of their business today, we can see that in this chart, financial services products are growing at a rapid pace. And so that will start to reflect in their revenue mix, which will also change the margin profile of the business and ultimately lead to profitability at scale. So everyone, all the, Morgan Stanley, Jefferies, Mizuho, they're all talking about this bank charter. And this is not to be understated, right? I mean, this is important. SoFi has stated that they think, they're hoping to have a bank charter in hand before the end of the year. Some of the analysts think it'll come early next year. But this is really meaningful because Galileo's infrastructure can actually complement obtaining a bank charter, which makes it easier for SoFi to partner with other companies and offer more traditional banking-like products like sweep accounts, FDIC insurance warehouses. And Morgan Stanley specifically noted that SoFi's approval of its bank charter could boost total revenues by 10% just within its first year, solely based on the fact that they'll have access to the same low interest rates as other banks. As far as marketing goes, as I mentioned, SoFi is investing aggressively into sales and marketing. In September, they announced a new brand campaign called Move Your Money, and I'll have a link to that in the description. It's airing all over, the NFL, college football, all these commercials, and they have this digital and influencer campaign. And kind of to get into that in more detail, there's a lot of fintech competition out there. There's a lot of mobile first platforms, Cash App, Venmo, Zelle, among others, and there's also a lot in Europe too, right? And so SoFi's roots kind of stem from the hardest part of consumer lending, though, right? Which is or consumer finance, which is lending, and that appeals to younger demographics, Gen Y, Gen Z, namely. And they have built this robust digital offering. They are relentless when it comes to the experience on a mobile device. And so both of these attributes combined, I think, give them a head start when appealing to Gen Y and Gen Z. And so look at this. This is actually insane. They have this, this campaign where they're launching a sweepstakes and they're calling on members to share their money moves moments. And in total, here's the important part. SoFi will pay out $75,000 in prize money at most. As of the time of this post, the hashtag SoFi Money Moves has been viewed 6 billion times on TikTok. So think about that. They're going to spend $75,000 on a campaign to get 6 billion eyeballs looking at them on social media. That seems very efficient to me. Top line management. You've got this guy, Anthony Noto, is the CEO. He's formerly from Twitter as well as the NFL, and he was the head of TMT Investment Banking at Goldman Sachs for many years. They just hired Chad Borton to lead SoFi Bank. He was at USAA in Fifth Third, and so this is important because, I don't think this guy would have come to SoFi if a bank charter wasn't, more or less a done deal, personally speaking. Lauren Stafford-Webb, she's their head of marketing. Amazing experience from Intuit and P&G. I think we got to give her a lot of credit for this kind of TikTok, campaign that the SoFi's marketing has spearheaded. And then I put this guy Derek White on here as well because he's the CEO of Galileo. And before that, he was at Google Cloud. Like I said, I own roughly 600 shares of SoFi at $17 cost basis, so pretty big position in my portfolio. But I did buy when it was still IPOE. Shortly after the merger was announced. I am long SoFi. I've not traded any of my shares. I do not plan on trading any of it. I'd like to actually double down on this position and build on it over time. But anyway, I'll have some links to some articles to the Jefferies research notes and Morgan Stanley. They've been, kind of consensus right now is anywhere between $23 and $25 per share. And again, that's barely even pricing in the long-term prospects of Galileo. So let me know what you think. Again, subscribe to the newsletter, totally free. I try to do these deep dives a couple times a week and follow them up with videos. Hit the subscribe button on YouTube, hit the notification bell. You'll be notified anytime I do a video. And remember to comment, let me know what you think. Thanks.